Experimental outcomes. Results from Donald Trump's economic experiments will start to come in. Archie Hall, U.S. economics editor, The Economist. Scientists like to run experiments carefully, isolating variables one at a time. Donald Trump operates rather differently. Since returning to power, he has set off an expansive spree of economic experiments, the most radical such program in America for a century. Tariff rates are now at levels last seen in the 1930s. Government deficits are the widest ever, other than in wars, pandemics, or deep recessions. No longer is there even a pretense of a plan to bring public spending into balance. The independence of the Federal Reserve is under its most sustained assault since the Nixon years. Annual immigration has been yanked down from several million to near zero. On its own, any one of these policy shifts would be a major departure from business as usual, with serious consequences for America's economy. What makes this moment distinctive is that they are happening at the same time. The American public and the world economy have become Mr. Trump's unwitting test subjects. Some consequences are already visible. Tariffs and the uncertainty around them have dampened growth and raised prices. Low migration has messed with employment figures. But 2026 will bring clarity about how much Mr. Trump's experiments have upended the economy. Weak profits. United States, GDP growth forecasts, %. Sources, Bloomberg, Haver Analytics. It may fall short of doomster's worst fears. Trade barriers will not benefit America, but manufacturing and goods trade make up a relatively small share of GDP. Supply chains will prove adaptable, as they did during the pandemic. And much of the economic harm of Mr. Trump's agenda, for example, from making America less attractive to brainy immigrants, or undermining competition by meddling with private firms like Intel, will take years to materialize. Moreover, the surge in government spending unleashed by the One Big Beautiful Bill Act will start showing up in 2026, ginning up demand. Easier monetary policy from the Fed will also boost the economy. That economic sugar high could help obscure the full impact of Mr. Trump's economic experiments, at least for a while. And investors seem unperturbed for now. Stock markets are pushing all-time highs. In 2025, bond yields rose by less in America than in any other rich country. Forecasters have erased the big hit to growth that was projected when Mr. Trump announced his tariffs in April. Still, the consequences of Mr. Trump's stagflationary mix of policies will probably show up clearly in the GDP and inflation figures for 2026. Americans will also notice higher prices, as tariffs make goods scarcer and lower immigration does the same to labor. But will voters blame Mr. Trump in the midterm elections? There is also the risk of a more severe crisis. This is most likely to start in markets, for instance with a stock market crash. The AI boom has stretched valuations, and some disappointment is inevitable. Americans have piled huge wealth into stocks. Losing those paper gains could seriously crimp spending. Also conceivable, and far more troubling, would be a bond market panic. High government debt and deficits mean investors are looking at scenarios that would once have been absurd, such as an inflationary default, where high public debt is repaid by debasing the dollar, or financial repression, where private funds are channeled towards the government to help reduce its debt. Jerome Powell's retirement as Fed chair in May could be a moment for that to crystallize, especially if he is replaced by an easy-money lackey. In Europe, bond vigilantes are circling. Bond yields in France and Britain spiked in 2025 after governments shirked tough budgetary choices. A similar scare in America, the world's main issuer of safe assets, would be momentous. But it is no longer unthinkable.